Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're getting the microscope out and we're going down to that end of the market, the micro caps. And to talk about it, we have Andrew Smith from Perennial and David Allingham from Eley Griffiths. And about 12 months ago, everyone was cutting their throats at the small end of the market. The micro caps were in the doldrums. Since then, they've posted again 15%, beating the overall market comfortably. Well, David, been a pretty good 12 months. Do we keep going? Is there value? Is there opportunities at the small end of the market?
I think we do. Look, we're more bullish than most on the domestic economy. I think small caps are highly leveraged to that. I think when you combine that with the resource element in our benchmark, which is quite high, and the mining services, so they're derivatives, I think you're looking at a sector that's come earnings upgrades and got some good momentum behind it and some good valuation characteristics. So I think those smalls can continue to outperform.
All right, stay on the roll. Resources. Been terrific over, or resource and resource-related stuff, been terrific over the last 12 or 18 months. We got it in the price yet, or are they going to keep going?
More to come. I think that sector's still come upgrades. If you run spot prices, whether it's copper, coal, iron ore, particularly nickel and Brent, I think is a great one. You know, you've got 25% spot upgrades to oil stocks into calendar 19 later this year. So I think you see that sector come quantitative earnings momentum and upgrades, which is very powerful in this market at the moment. And I think in addition to that, you've clearly got a sector that's still got great valuation characteristics, high free cash flows, good balance sheets, and actually the calibre of these companies are quite good when you look at companies like Whitehaven with, you know, material tier one global assets. So I think that sector's still going to do well. Okay,
Andrew, I don't know if you can match that excitement. It's been a pretty good year. You've punched out some pretty good numbers. Yep. The micro caps in general, or small to micro caps, yep, good 15%. History tells us they can't keep going. What do you think?
Well, if you look a bit longer than 1 year, they're still a long way behind large caps. So if you look at where they've come since the GFC, they're a long way behind still. So we think there's potential.
They haven't done much for a decade.
Exactly. Citigroup actually put out a great piece recently, which gives some good context around that. So it's worth looking at. So I'd agree with David. I think there's more to come. The other great thing about small and micro caps is a huge universe. So we're looking at 2,000 stocks. If you can't find 50 stocks you like out of 2,000, then you probably should have another job.
Geez, that's making me feel bad. Resources, we talked about it over here. They're a big part of the small cap market. Yep. Been a fantastic place to be right through the spectrum. Yep. You know, even lithium has found its feet again and starting to bounce again. What do you think about the sector?
I think it was an easy trade 12 months ago, rising tide. Now we're being a bit more selective. We still like copper, oil, which Dave mentioned, probably less so in the bulks. So we're a bit more selective in resources. And mining services have probably moved to fair value. So they're not a sell yet, but you know, there's earnings momentum there. The valuations are okay. So there's a little bit left in it, but not the easy trade it was 12 months ago from our view.
Okay, let's go to another big sector among the smalls, techs. It's a tough place. There's a lot of crashes and burns, but there's also some terrific ones. We've had Biggin, we've had Get Swift, but we've had things like Altium. As a sector, do you think there's still value, there's still opportunity there?
We still like the tech sector. We think there's great opportunities, but you've got to look for the simple things: strong balance sheet, strong cash flow, and honest management. I mean, that would rule out the two that you mentioned previously. Yep. If you run that simple ruler over the sector, there's still good value there.
Okay, some of these tech stocks though, Dave, they've been very expensive and they keep growing, but the multiples go 20, 30, 40. Do we have to be careful?
Oh, absolutely. Look, I think Australian tech stocks are few. It's very hard to find real tech stocks in Australia. Most of the little ones in microcap land, these things have been tried 50 times in Silicon Valley before. They're down here for a reason. I think the ones you mentioned, like Altium, Aconex was another good example. There's been a couple. Xero is probably the one we've played in our largest small companies fund. You've had third-party offshore validation there with the likes of Matrix Capital coming in and backing these guys, smart money out of the US. Down in the microcap land, I think tech investing is very dangerous. We really don't have many in the portfolio that are pure tech plays. We have leveraged stocks like Hub and Premium that are leveraging technology in a traditional business. That's sort of where we seem to sort of monetize that technology space the most. Okay,
all right, let's look forward, which is always the hard one. We've had a terrific year. Can we repeat? You think we can? And where do you want to be to take advantage of that, even outperform the overall market?
Look, we're still bullish broadly equities. We think equities are still a good place to be from an asset allocation point of view. You look at some of the contrarian indicators like the put-call ratio in the US. That's quite overextended. So, you've got a sense that potentially pessimism's come around a bit too aggressive at the moment. So we think the market's due a good June quarter. April's seasonally a pretty strong month, and we've seen that this year. As I mentioned before, I think commodities are a great place to be. You've got mark-to-market spot upgrades. earnings quantitative momentum in this market is very powerful. We've seen that with the quantitative funds and what's going on there. So I think the commodities and those businesses and those resources that are leveraged from that space are good valuation support, and are therefore a safe place to hire from a valuation perspective, and also have earnings momentum. And it's a real sweet spot, we think, for the next 12 months.
And can you give us just a couple of names, maybe?
Yeah, sure. Look, so we like Independence Group into calendar 19. We think that's going to have a real purple patch of a year as far as cash flow generation is concerned. I mentioned Whitehaven before at the bigger end of the small resources space. So they're two names that we're pretty fond of.
Andrew, you said you had 50 ideas at least. So let's go down that path. The next year, where do you want to be positioned? If we're all bullish about small caps or micros, or potentially bullish, where do you want to be positioned?
Well, we touched on mining services before. I still think there's some select names in there which are good value and have got strong balance sheets, so we've still got a few names there. We are tilting our portfolio to be a little bit more defensive if we can find good value. So agriculture and healthcare is a sector we're quite interested in at the moment. But really, as I said, there's 2,000 stocks out there, so often it's not a theme, it's individual stocks that are really jumping out at you.
All right, same as Dave, couple of names.
So in agriculture, Huon, if you've been down to the fish markets, you notice there's been 2 price increases in the last month, so we think Huon's going to be the key beneficiary of that.
That's salmon.
That's salmon.
Yeah.
Yeah, what did I say?
No, you said fish, but just salmon, yeah.
That's good. So yeah, in the agricultural, that's the sort of key exposure. Integrated diagnostics in the healthcare space is one we like there.
Okay, they might be small, but like most things, if they're small packages, they're normally very rich inside.